Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. After the big break low and the two pitchforks split this market back in October last year, we have seen some deviations lower to make a small sideways triangle, for example, over November and December last year, but overall prices had tracked sideways until 6 weeks ago. To discuss this, we must look back now 15 weeks ago when I said about the sideways movement on the market, and I quote, "I suspect this seeming sideways movement may not last, as coming in from above, we have the declining short-medium moving average, currently 16,925, which may well apply pressure on prices and cause an action or a reaction," end of quote. Now, remember that short-medium moving average is highlighted in green on my daily chart, and it will crop up again. Anyway, in mid-February, we did have a reaction to the green highlighted short-medium moving average. Saw the market break above it and through the declining medium moving average, currently at 16,815, almost as if it wasn't there. Indeed, prices used the medium moving average highlighted in mauve on my daily chart along with the June 2021 low at 17,095 as a base of support for another move higher. Through the October 2019 high at 17,815, through the July 2022 high at 18,265, but peaking 3 weeks ago just under the gold highlighted declining long moving average, currently at 18,410. Prices have since pulled back, but have started to find a base again at the May 2021 high at 16,610 and around the combination of the short medium and medium moving averages. Now, I've been contemplating what sort of pattern the market's creating. I said 3 weeks ago, and I quote, "My initial thoughts 2 weeks ago," which is now 5 weeks ago actually of all things, "was to look at the early November 2023 to-date action as a possible rounded bottom pattern. But the more I look at it, the less I like it. Instead, I'm inclined to look at the whole early August 2023 to date action as a possible descending scallop pattern. This has lent me, well, this has merit, this pattern, but it is very elongated, and that is a negative point. The main thing in its favor is a new pattern I suggested might be created 2 weeks ago. So this is actually now 5 weeks ago, and which we may have indeed completed. That is a monthly key reversal up by some considerable distance. Thus, I'm looking now for where this hesitation will be for such a pattern on the top side. End of quote. So, there's quite a bit actually. So, I was ready to look for the hesitation in this market 3 weeks ago, and guess what happened? We had the hesitation 3 weeks ago, and prices have dropped back down, or so I said last week, and I quote, "This hesitation could mean we see a test down to the lows seen in February and November 2023, down to the 16,000 to 15,850 zone," end of quote. Well, we're well short the 15,850 zone, which doesn't make it impossible, but sure does make it difficult. It now depends on whether prices will try back up or go the distance lower, as these next few days could determine what the greater plan will be. In the meantime, keep your eyes on the moving averages and how the market reacts to them, both below and above. LME 3-month zinc. The big picture here is based very much on actions originating from last year, with some limited skewing, I suppose, and recently a bit of a battle happening. You see, as I've said over many weeks here, we've had two competing shift patterns here. We have a recent late May to mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market is at the moment between the middle tie and above, currently at 25.64, and the lower time below, currently at 23.99. With all the moving averages clustered around where we are, between 24.65 and 25.13. This segues into the second part the second shift pitchfork, the larger, very large May to August 2022. That's right, a pattern that is a year and a half old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. In this one, and it is a very important thing to know, in this one, prices late 4 weeks ago, then again 2 weeks ago, a little bit last week, and now this week have punched in and out, up and down, either side of the venerable upper time, currently 24.77, and that's of this bearish shift pitchfork. This has been the rub of this market. I said 5 weeks ago, and I quote, the upper time of the larger purple highlighted bearish shift pitchfork is now well within the smaller bright red pitchfork. Indeed, they cross over on the unusual 29th of February this year. Now, I further added, and I quote, I'd now like to emphasize once again how this bearish shift pitchfork, which is now well over a year and a half old, I wish to emphasize how it's still working in the overall bigger picture to drive prices lower despite moves upwards during 2023, including the monthly key reversal up we saw in December last year. One way or another, the times are being tested here. The question is whether the bright red bullish shift pitchfork will give way, and we see prices move down through the lower time again, or will the bigger purple upper time give way, and we have a whole new potential outlook on this market. End of quote. As I've said during January and early February, we should know by the end of February, probably sooner. And that was another quote. Well, it took a little longer than I anticipated, but the break higher up and out of the purple bearish shift pitchfork has not been adequately sustained, with lower prices and the market traveling down the upper time, sometimes on top, sometimes underneath. I think I summed up the situation pretty much last week when I finished off by saying, and I quote, it may well have to wait until the end of April when the rising red lower time exits through the declining purple upper time, when we may see such a resultant potential ripping apart action. End of quote. Even today, this seems a likely course of action. LME 3-month tin. There are multiple major patterns still visible and still acting here on this daily chart. This year's actions has seen the market push back up from the stratified congestion bands below and over all the moving averages up to highs not seen since July last year. This emergence led me to a just barely possible pattern here. Mid-October 2023 to late January 2024 inverted head and shoulders pattern with a dark blue highlighted neckline currently at 26,630. I said eight weeks ago, and I quote, you see, I am not happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize this pattern to the information available, and whilst it looks okay-ish, I'm still not happy about it. Hence the moniker of a possible reverse head and shoulders pattern, end of quote. I even went as far 8 weeks ago of laying out some potentials above, which have since become targets, and not only that, but targets that have been reached. This brings me to another pattern, and one related to the reverse head and shoulders, and that is a mid-October 2023 to-date ascending wedge pattern. You can see this highlighted by two trend lines. The lower trend line currently at 26,650, highlighted in bright red, and supported by the rising short medium moving average, highlighted currently in dark blue on my daily chart. And before you ask, yes, we have today reached the apex of this pattern. But has given some potential opportunities on the outside. So we have a primary target in the 28,360 area and a secondary harder to reach target X3 up there in the 29,600 area. The primary target has been achieved, whilst the secondary harder to reach target is still alive. Okay, so you may think that maybe after all there is, that may be what it may be, but there is a further final pattern that is developing, and it's related to the lower trend line of the ascending wedge pattern. I said 3 weeks ago, and I quote, "You see, it seems the ascending triangle pattern has morphed into another pattern, this time into a bull channel. A late December to date bull channel, currently 26,650 to 29,510. To help aid in seeing this pattern, I've highlighted the upper bull channel line, also in bright red, same as the lower bull channel line. I said 5 weeks ago, and I quote, "Of all the patterns, I think this is the one to pay close attention to, as it's still fairly young compared to the other patterns, but it is also the most potent." End of quote. What has been extraordinary has been the influence of the upper red bull channel line, currently at 29,510 on this market. Not only has it capped prices at all this year, but it has caused the market to fall off a cliff two weeks ago. The move lower was so violent that I mentioned it when it happened, that we were a good way lower towards making a possible weekly key reversal, and that's when I actually mentioned it. However, in the end, prices tempered the move and ended up with a lesser outside week. 2 weeks ago. Since then, we've seen consolidation based on the congestion at 27,330, but I suspect more important was the 50% Fibonacci line for 2023 that is just below at 27,155, and the gapping move higher today, which hasn't really managed that much compared to 2 weeks ago. Over all this, please remember we are still inside a bright red highlighted bull channel.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.